what do you make of the market's performance this week? In the last week, you know, give or take, we've seen the market generally improve by about 1 billion shillings of turnover in the last week alone.
Yeah, the market last week was generally a bit upbeat. Today, I think we saw most investors taking being a bit cautious in the market, and I mean it's expected with the pressures bearing down on both the equity and fixed income market from inflation, the higher cost of production for the companies listed on the exchange. So we expected, in fact, a counter such as KCB, which was closing its books today, we actually expected to see quite a lot of interest in it, but this was actually not so. But we did see quite some interest, foreign interest in East African breweries.
All right, let's talk about the results that are coming through. Q1 results for Diamond Trust Bank of Kenya. Pre-tax profits up 64%. I mean, they've seen a rise in assets and net income, especially from subsidiaries within East Africa. What do you make of their results and just generally of this stock?
Yeah, the DTB has always been quite a good stock, and especially it has quite a number of strong subsidiaries across the region. Across the financial sector, we do expect to see growth in profits. Maybe not as high as we saw in the fourth quarter and third quarter of the previous year, financial year, but we do expect to continue seeing good results. But the question whether this will translate into more robust trading on the exchange, we are yet to see that.
Let's talk about what's happening on the agro-processing side and just general liquidity within agro stocks. Rio Vipinga has been doing phenomenally well. Has that trend continued into today? I mean, we've seen the counter gain as much as 7%. What's driving this counter?
Today we actually saw it was a bit idle, quite a bit quiet on that counter. I mean, it contributed mostly to individuals looking to take up positions on that counter, especially people are holding large quantities of this stock, looking to increase their shareholding.
All right, let's talk about housing finance. We've seen their profits jump 65.5% for the full year 2010 results. I mean, obviously, we're seeing lenders enjoying good returns on the back of heightened borrowing within the mortgage sector. Firstly, what do you make of the results coming out of housing finance? And then generally, let's start to talk about mortgage lending and the future for it in Kenya.
Housing finance was expected. I mean, the real estate industry has been very robust over the last 3-4 years, and it continues to grow. There's still quite a lot of demand for housing in Kenya, and with more and more financial institutions concentrating on their mortgage lending books, we actually expect this to play a big part in the incomes that most of the banks post going forward. The real estate industry is expected to continue being quite robust going forward, although what's with most investors concentrating on middle income housing, but this may be affected if the situation we're seeing at the moment with such high inflation rates, incomes not keeping up with inflation, this may be affected, but I think that's the majority of concentration is on middle income housing.
But I mean, inflation is not the only caveat there, Kenneth. There's also the fact that, you know, demand far outstrips supply, and some of the constraints on mortgage lending institutions is the flow of credit from banks. About only 12% of bank credit actually goes within the sector, and that's been a huge limitation for growing particularly dynamic mortgage lending facilities for the ordinary man in the street.
That is actually true, and the banking sector, in fact even central bank, have really been trying to boost mortgage lending within the financial industry. But and what might actually be a hindrance, what we're seeing now, if with the rates shooting up, the cost of mortgages will continue being more and more prohibitive to middle income earners and the lower end of the income bracket. So actually inflation actually plays quite a big role, and unless this is stabilized, we'll expect to see the rates continue rising over time.
We're also hearing news that there's a French media company known as Havas Media Group entering the Kenyan market. They've already invested about 120 million shillings in seed capital. Now, Obviously, not a lot is known about the French company other than that it's listed on the Parisian Stock Exchange. But basically, has the local advertising industry responded to the entry of Havas and what it's going to mean in terms of making the sector more competitive? And I'm asking this, Kenneth, because some of the media stocks, the advertising stocks, have been perennially good performance on the NSE.
Okay, the information about that has been rather scanty. But at the moment, we've actually seen no reaction from the market. I think most players are actually waiting for a bit more tangible information to hold on. Mostly it's been rumors and by word of mouth at the moment.
All right, and finally, just to tell us what's happening on the fixed income side, a few short and medium-term papers have been introduced onto the secondary markets. What's the likely uptake there?
What we saw with the last auction for the month of April was an undersubscription, a serious undersubscription actually. I think the first of this year, the first we've seen in around the last eight months. But this could actually be attributed to the tight liquidity situation we've been seeing in the industry. And although we expect quite a large number of maturities this year, about 40 billion in treasury bills and treasury bonds, if CBK does come in, as they did in the last month when there were maturities, they came in and did a repo. If they do come in and do another repo, we might see another tightening. But if the liquidity level stays as it is at the moment, we expect the issue may be fully subscribed. In fact, by issuing 3 papers across the curve from 2 to 20 years, what central bank has done is actually they've covered most of the market from short-term investors all the way to long-term investors such as insurance companies and funds. So we should expect they should be able to raise the full 18 billion successfully. As the rates, that's something else totally, because with the 20-year bond, for example, despite the coupon being at 10%, we may see bidding going up all the way above levels of 13%, which is actually where the 30-year was issued a few weeks ago. So, I mean, that will generally put that bond underwater, and it's actually not looking good for yield rates. As yields continue rising, we should see people quite getting burnt, especially on the longer end of the curve.